Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, traders. Welcome back to another live stream. Happy Monday to you. Thanks for joining me back for another exciting week. This is a monster week, which is crazy because we had a monster week last week, but this week really is a big one. This week we got some stuff from the Fed, and that's going to be probably the main theme of this trading week as we get started here. On Wednesday, we get from the Federal Reserve, we get a couple key things. So the obvious one is we'll hear from Jerome Powell. The press conference will be what markets are really interested in. Fed funds rate, pretty much guaranteed, almost perfectly guaranteed. Nothing is absolutely guaranteed, but pretty much certain that we will not see our first rate cut this time around. With that said, what's more important than this number, yeah, sure, 5.5 will come out. This is not what's going to move the market. Almost certainly we will get a 5.5%. They'll hold rates steady. But what is more important to the financial markets this week, guys, is two key things: the press conference and these two things. I guess actually three things. The statement and any revisions they've made or things that they've changed in the FOMC statement that does get released. I'm sorry, I spoke wrong. The statement will be important, right, from Jerome Powell if he says anything key. The press conference will be important, but this one here is also very, very important this week, guys. This week, we get the FOMC's economic projections, which will include, very importantly, the dot plot from the Fed. The dot plot is like the idea of how many rate cuts or where they see interest rates going for the foreseeable future. At the beginning of the year, we got this. We had the idea from the Fed that we're going to see 3 rate cuts. All eyes for markets here this week, guys, are we going to see 3 still, or are we going to go to more like 2? If you get a scenario this week, guys, where we hear from Jerome Powell, we hear from the central bank in the United States, and we see the projections here come down to 2, the market is going to freak out. What would this mean if there's less rate cuts expected? If that happens, gold probably drops, stocks probably drop, and the dollar takes a little bit of a trip to the moon really quick. Right? So that's what we'll be looking for this week. That is going to be really important stuff on Wednesday. In the meantime, how do we prepare? What do we do for the upcoming days? Well, if you're a long-term swing trader, you may still be looking for trades. If you're a day trader, you might completely sit out for a little bit. But in my view, the way to approach this is just look for setups with the EDGEFINDER. I mean, honestly, I'll show you this really quick. We made some improvements, and James and Chandler, you guys might find this kind of cool too. So I'll explain this to everybody. So over the weekend, the developer and I, behind the scenes, we worked extensively on getting this set up, and I'm really proud of it. So check this out. The EDGEFINDER's top setups algorithm looks at a whole bunch of things. But if you remember, if you're an avid fan of the EDGEFINDER, you may remember that this section used to just be called the economy section. Okay? We used to just call this section the economy section. But I looked at that, and I looked at it again, and I looked at it a 3rd, 4th, 5th, and 100th time, and decided this was too confusing, just calling this grouping the economy tab or the economy section. If you knew and you understood how it worked, then yeah, that's great. But for people who are looking at this stuff, Let's break this down further and give respect to each variable here that impacts the scoring of the EDGEFINDER. So when you are looking at all the different assets on the EDGEFINDER, first of all, we played around with the colors. I'm pretty proud of how the colors look. Can I ask you guys in the audience, do you like the color shift? It's slight, but again, I know I'm talking to some EDGEFINDER fans and EDGEFINDER users right now. I asked you guys on my Sunday video, if you're an EDGEFINDER user, type EF user, and a ton of people typed EF user. It was a proud moment. But check this out. So we changed some colors, but more importantly, we added these categories. So now you can see specifically how retail sales and the latest data from services PMI, manufacturing PMI, the GDP numbers coming out of the United States. I wanted to see this in a more granular way from the algorithm's output. So now we can see it. We're more transparent with the scoring now. And that's a trend we're going to keep going down. We're going to do that next with the labor market stuff. We're going to parse that out, spread it out so we can see more of this data and how it's impacting our charts, impacting our setups. You don't like the colors? We have some color dislikes. I don't know. I feel very fond of the EDGEFINDER's color scheme. I am absolutely loving the blues, the reds, the grays, the dark grays. I love the color schemes. I don't think we'll change the color schemes anytime soon, to be honest. But anyways, with that said, it's not the biggest update in the world. I know if you're but if you're an EDGEFINDER user, that's huge because we tweaked that. Yeah, cool. Thank you for that. Appreciate it. Thank you guys. Yeah. So anyways, with that out of the way, let's take a look at kind of what we're getting here. What we'll do is I'm just going to remove the neutral readings here, see where we're at with the EDGEFINDER. We've got several bullish readings. Oil's on there. I'd like to take a closer look at oil. Notably, gold is not on there. And what that means for my positioning, by the way, is I am long gold, but tentatively will get stopped out if price rolls over. So my theory with this right now with gold is that the EDGEFINDER's reading is neutral on gold. And so how do I play that? Well, if I'm in a long position, which I am, so if I'm long, how am I handling this if I get a neutral reading now from EDGEFINDER? So initially, EDGEFINDER was bullish, right? EDGEFINDER was bullish. We now got the trade. Great. But now the EDGEFINDER is neutral, right? And for neutral. What do we do in that scenario? Well, here's what I do. I just trail a stop. So if the market rolls over here, then cool, I'll take my profits. I'm good with that. But if the market can bounce here and continue to push off of this area, then I'll try and hold on to that trade. So just neutral. Neutral means I'm not buying, I'm not selling, I'm just waiting. So anyways, let's take a look at some other stuff here. We're getting some bearish readings on the Kiwi against the dollar. That's kind of a pseudo bullish USD read, right? Because we're selling Kiwi, buying dollar in that case. Oil's interesting. Euro CAD, Euro Swiss, Euro Pound. Look at the Euro. The Euro is making a play. And notably, the DAX as well, which of course looks at a lot of economic data out of Europe, is suggesting that perhaps the Euro could see a bit of a push. Let's look at Euro Yen really quick, just while we're on the subject of Euro, which is, again, like I said, it's getting a lot of strong reads. See if we see anything on the Euro against the Japanese yen. Here's the daily chart. I'd be interested potentially if we get a breakout through the highs, right? Break and retest could be something of interest as a potential swing trade. Let's see what else we had. Euro Kiwi. Let's look at Euro Kiwi because I know several people who are trading long Euro Kiwi, and we are now coming up into resistance here. But what I'd be interested to see, same concept with the Euro Yen, I'm getting a bullish reading on the EDGEFINDER for Euro Kiwi. So my thought process here would be, can we break through and make a leg higher? This actually would be incredibly bullish to watch this week. If we get this move, boom, boom, I actually really like Euro Kiwi to the long side. Why? Why Euro Kiwi to the long side? Well, DM says, how early was the EDGEFINDER showing gold bullish? I'll show you that in a second. I can show you that historical scoring on the EDGEFINDER in just a second. Why Euro Kiwi to the long side? Score is 7 and Euro Yen is 8. COT data is giving us some positive confirmation, so favoring euro over the Kiwi. Retail positioning would show you that retail traders are shorting the euro Kiwi and the euro yen, so that's a bullish contrarian signal. Seasonality is not working in our favor, so the month of March, not particularly bullish for euro Kiwi or euro yen. The trend is to the upside, so we're getting up scores there. GDP numbers really favor Europe over the Kiwi. It's mixed when looking at euro yen. Manufacturing PMIs, services PMIs. You can see how the EDGEFINDER is scoring each tab, and this is considering a whole lot of data automatically and then generating our bullish signals. What I love about this is that I don't have to go dig through all of this market data by myself. It's generating these signals automatically in the software. So yeah, it's kind of cool in that regard. So I do like euro pairs to the upside. That could be an interesting play this week. Oil also something to watch out for. And the DAX seems like an interesting play as well. The DAX is getting a lot of strength here. Why is that? Well, look, inflation in Europe coming down, retail sales, services PMI, labor markets looking okay relative to other places. I mean, you're getting some nice economic reads, which are contributing to this overall +9. Usually, guys, when you get a 9 score or a -9, what that usually is entailing is that you've got something that's really a lot of indicators are pointing one way or the other. And I really like those sorts of trades. Why is, I promised I would do this. So let me do this really quick. I wanted to take a look at the gold market on our historical backtest page. This page is being worked on currently. We're making some improvements to this. So that's why you got your under maintenance thing. But the functionality is mostly there. But somebody asked me how soon was gold giving us a bullish reading. This is our historical reading on gold from the EDGEFINDER. So if you want a little back test here really quick, here's the EDGEFINDER's bullish bearish reading. So it was bullish as early as February 24th. So let's go take a look at February 24th on gold. And this is when you got the signal from the EDGEFINDER to be more bullish. So that's going to come in right, I'm going to do a vertical line, February right here. So over the weekend, it flipped bullish. That was likely on COT data. That is right when I entered my trade. This is a poster child for the EDGEFINDER right here, guys. So the EDGEFINDER got bullish. I liked the setup on the lower time frames. I entered long, and it has run for the hills since then. So again, what this page here shows us on the EDGEFINDER, this is the historical backtest section on the EDGEFINDER. If you have a copy of the tool, feel free to play around with this. You can go to a particular asset and see the historical scores that were generated for each asset. So check this out. What we started to see is a pattern of cooling economic data and stubborn inflation. That pattern flared up some bullish signals on gold, and it has been a wonderful signal since. So I've stayed pretty much long since this point. So I've been in this trade for some time. And again, the EDGEFINDER, I want to get out in front of myself. It's not always right. It's not a magic money machine, and I'd never want it to come across that way. It's a wonderful tool. It helps traders source a lot of data very quickly, but it's still going to require you to be, conservative with your trading, do all the right things, risk manage, psychological discipline. It's not going to do all that stuff for you. However, the EDGEFINDER generated a bullish signal at pretty much the perfect time. Obviously, you could say, well, perfect time would have been there, but nothing is perfect. Nothing is foolproof, right? When it comes to trading, markets are difficult to time. But regardless, we've seen that this has been a wonderful signal from the EDGEFINDER. And since then, it's kind of gone neutral. So for me right now, I am in those trades. I have one trade here, one trade here. And my theory here is I will stay in the trade unless it breaks through those lows. If it breaks through those lows, I'll stop out of my position. If it continues to run, the EDGEFINDER might start generating another bullish signal and I'll stay in it. Otherwise, neutral unless we break through here. If we break through here, short-term bearish for me on gold. If you're somebody watching it, my concept with that would be, again, we came down and we tested this area. In fact, we tested a little bit lower than this area and now have bounced back. But I'd like to see from here, guys, I'd like to see a drive higher on gold. And if we do not see that, it's time to take profits. Okay. Again, trade 1 is down there. Trade 2 is here. We'll see how that plays out. If the US economy goes into stagflation, will the Fed announce this? No, the market will. The Fed usually won't say anything. The Fed is not going to say come out and say, by the way, that we've achieved a soft landing, right? They might say inflation has made progress, or but they'll always say we've got more work to do, so on and so forth. Okay. So, yeah. H ball out. Ivan's out of the scene. He comes on every week. What are you talking about? Ivan is a once a week contributor to the A1 Trading Show. No problem. Thank you for the question. What's gold going to do this week? I wish I could tell you with certainty, but I cannot. Right now, I mentioned this earlier from the EDGEFINDER's POV, right? It is giving us a neutral score. You can see there's its latest scoring. We'll go back to the top setups page. And what I'll do now is I'm just going to filter. We'll do a couple here. So I added this tab as well. Check this out, guys. You can select for a couple different ones. So let's go oil. Let's go gold. Let's take the S&P 500. Let's do the euro dollar. I'm just picking the ones that I know a lot of traders here care about. Let's do pound USD. And I love that I can now do this. So check this out. This is cool. So now with the EDGEFINDER, with this top setups algorithm page, you can actually just sort it for the ones you want to look at. So if you don't want to look all of them at the same time, here's some of the most popular ones. So the S&P 500 is getting a neutral reading. Gold is getting a neutral reading. The euro is getting a neutral reading. The Dow and oil are getting bullish. And this is really interesting to me. I'd like to take a closer look at the Dow, that's US 30, and take a look at oil. These are possible bullish setups for me this week. So what I'll do now is I'll flip over to the EDGEFINDER's setups here. Let's go to Dow really quick. So the Dow, on a daily chart perspective, has been in this grinding upward trend. And, the EDGEFINDER here for me is generating a nice bullish setup. But overall, I'd be very interested to see if we can get a pullback down into this region here. This could be a soft pickup for me this week. And what I mean by that is a small size, because we do have the Fed meeting this week. So I don't want to go super size on anything. And truthfully, I don't really trust any of these moves that we're seeing right now, just because you don't know if they're going to follow through or if they're going to completely reverse, because we have the Fed meeting on Wednesday. Okay. So be very careful. Yeah, so be very careful with that. How old are you? I'm 27. Can you explain how to use the put to call ratio? Yeah, it's a pretty straightforward one. I'll show you this really quick. Put call ratio is a really awesome indicator. All it does is it says what's the volume of puts relative to calls. If it goes lower, that means there's a lot more volume on calls. If it goes higher, that means there's a lot more volume on puts. If it gets extreme one way or the other, I usually take that as a signal to be a little cautious and perhaps even contrarian. So right now we're seeing a pretty low print on the put to call ratio. That would suggest a lot of people are getting really bullish. For me, usually what you see is that kind of taper off and go back the other way. So huge volume in calls or a huge volume in puts oftentimes is a topping or bottoming signal. It's not perfect, but it is it's worth acknowledging. It's not always the best timing signal, to be honest, but it's something to consider in your analysis, right? So the put call ratio is available on the EDGEFINDER. I do also want to say, if you guys would like to try out the EDGEFINDER, I'll drop a link here in the chat. If you click this link, you can sign up. You can apply for a 30-day trial if that's something you are interested in checking out. Click this link, fill out that application, and you can get some information there on the software. I do also want to take a quick look at oil really quick here. Let's see, we'll go US oil. US oil has also been in an uptrend. I'm interested in this one for a possible pickup. I've traded this one long. I've made some pretty good money on this one recently. But I think my next play would be waiting for a pullback here. We've had a nice nice push to the upside. So I'd like to see a little bit of a contraction, a little bit of a pullback into what was resistance, possible support. But I've had a pretty clean track record recently on oil, so we'll see if we can keep it up. If we pull back, I like that trade. Again, getting confirmation from the EDGEFINDER, getting a plus 6 on there. So yeah, should be interesting to see how that plays out. Inflation reads are relatively hot recently. CPI giving us a +2 reading on oil. So yeah, it's how is it giving us a +2? Well, it's because we're in an elevated, relatively speaking, inflationary environment, and we've seen inflation tick up higher recently. So the EDGEFINDER is scoring it hot for oil. COT also looks half decent on there, so I like oil. If we can get a pullback, I'll be interested in that. And yeah, should be keen. Also, really quick, guys, if you are not already inside of our Discord channel, I'm going to drop a link here in the chat. If you guys would like to join the Discord, it is free to join. Not all features are available for free, but there are some great free value points in there. Click this link if you'd like to join our Discord and stick around for a little bit. I'll give away something free towards the end of the show if I can remember. Yeah. Just recovered the investment cost I paid for the EDGEFINDER last Friday. I'm telling you all it's worth it. Just use it correctly. Hey, thank you very much for the positive testimonial. I appreciate that. EDGEFINDER is by no means a money machine, but with extra data, confirmation, trading experience, risk management, all that sort of stuff, it is absolutely a wonderful tool. And we've got dozens upon dozens of people who have shared great stories improving their trading with it. So again, I mentioned it earlier, but I'll say one more time. If you guys would like 30 days access to the EDGEFINDER, we'll drop a link here in the chat for you to get access to, again, 30 days, get some information by filling out this application right here. All right, real quick, guys, we're going to take a break and we're going to be joined in just a moment by EightCap to take a look at some markets ahead of this really pivotal week. It is a huge one for FX, for commodities, indices, etc. So stick around, coming in just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partner broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back on the show, joined by the one and only Coach Ivan FX from the A1 Trading Discord. Hey, Ivan, how's it going?
It's going all right.
Well, happy Monday to you, and thanks for joining me on the show. Real quick, I want to ask you some stuff as we get into this week, but let's just check the markets here across the board. We got indices moving higher, the Dow lagging the group. The dollar index is up on the day. You've got the pound and euro giving back some gains. Gold is it's up, but pulling back slightly, and oil is pulling back as well. Ivan, where do we start as we prep for this huge week, and how are you approaching it?
By not making any trading plans, by taking as it comes. It's going to be 6 major central bank monetary decisions this week from the G10 countries. So it's a lot. So there's going to be a lot of updating this week, and then I'm going to do whatever after that has happened. So it's just an update. So I don't want to be caught in the volatility in the
No, I totally understand that. You got to mention, you mentioned something that's really important there. You got the SNB, you got the Bank of England, you got the Fed, ECB. There's so many key banks and their key central banks, and their kind of positions will be a little bit revealed to us this week. Ivan, I guess so. Of course, I would agree. It's a risky time to jump into a whole bunch of trades, but more importantly, what are you looking for in terms of central banks and what they have to say, whether it be the Fed or another one? What are you really looking for as kind of a macro picture for currencies that you might be watching, or gold, or whatever you'd like to trade? What are you looking for the most out of this week?
This week, I'm looking to find my to get out of my baby face. Apparently,
Oh. Hey, I still got mine. I can't grow a beard, so I'll always have a baby face. That's okay with me. Nothing wrong with a baby face.
I did take this morning. Actually, that's actually very true. So thank you for noticing. But Bank Japan.
Okay.
If they're going to exit, that's going to be the kicker and the difference. Bank of England is not going to do anything. Fed is not going to do anything. Swiss National Bank is not going to do anything. Norges Bank is not going to do anything. RBA is not going to do anything. So Bank of Japan is kind of like the one that really sticks out, and it has the most volatility because that's where all the carry trades has been put out, and market has not priced it in. That's a possibility. So that's where the power is stored at the moment.
It is interesting. The Bank of Japan seems like the one that they kind of just come out of left field sometimes and surprise us all with something. And will be interesting to see if we get anything out of that. Do you have any trades open, Ivan, right now, or anything that all this news, this volatility could get you into in terms of like what's on your watch list?
Let me put you on a different mode here. I'm just gonna curveball you a bit. I'm waiting for a very strong seasonal pattern. That's the only thing that it is. Australian dollar, New Zealand, bullish from give or take 7th of March to around 15th of May. So I'm just waiting for this one to calm down. And this is kind of the only safe bet that I have out there. Safe bet, sorry, that was the wrong word. That's the only thing I can do because yen is going to be volatile, dollar is going to be volatile, gold is volatile, oil is doing whatever that is, and then the stock is doing his own thing. So that's kind of my only slow burner that I have at the moment.
Okay, Aussie Kiwi. So you're already in a trade, or are you looking to get in one?
I'm looking for this week.
Okay, cool. Yeah, that's of course an interesting one because the Australian dollar versus the Kiwi dollar, they have similar economies, but you point out something really cool there. You point out the seasonal tendency between the currency pair. Seasonality is a fascinating indicator that we could spend all day talking about. But you mentioned some other things there, and I want to ask you maybe about the euro dollar because I know we've talked about the euro dollar together for a long time. This week, what gets you, I guess, first of all, do you have a bullish or bearish bias currently on the euro dollar overall? Bearish. Okay. So overall bearish, what gets you into a trade this week? Is it a pullback higher that gets you in, or is it a breakdown and then a pullback? What could trigger, I guess, in terms of central bank jargon or speak, what could trigger you to get into a trade on that?
What do I need? I blatantly need a new lower low break of that. But I just need as the best thing I can get, and I don't get it. I think I will not get, but that Powell says that they're not cutting anytime soon. I like blatantly like not having it anymore anytime soon. Yes, and they need to be restrictive for longer then. And he is surprised that inflation has risen again or not fallen as expected. Any kind of those three comments would be very bullish for dollar because that means that we have small chances of May maybe that will be kicked out, and June will then be out of the picture. So market needs to then reprice when interest rates are going to come down again. So it's obviously that's what I need.
Yeah, and again, I like the way you broke that down because if he did come out and say, Ivan, what's fascinating to me is this week we get not only the press conference with Jerome Powell, but we also get the dot plot from the Fed, and that's going to be huge because what I love about the dot plot is you can't hide in creative speak when it comes to the dot plot. The dot plot is a dot plot, like it is literally just numbers of how many rate cuts and when, and the market's going to love that or hate that based on what it says. Because what if that dot plot comes out and suddenly we're not seeing 3 rate cuts anymore. We're seeing 2. Or what if we do see still 3 is on the table? And, it is an election year, so there's so much tension here. Yes, you have some hot inflation reads, but it's also an election year. The current president will probably keep Jerome Powell in the seat, and if there is a change in office to Donald Trump, it's possible that he could get removed from it. So there's so much tension from that perspective. Donald Trump has been pretty vocal. He doesn't love everything that Jerome Powell has done, and I don't know. I wonder if that's a factor in whether they'll admit it or not. If it's a factor in their monetary policy, I don't know. What do you think? If you see 2 rate cuts now factored in, I imagine that would kind of be your euro dollar bearish setup, right? Because now you're suddenly the needle has moved dramatically. Dollar's getting strong. Would that be a fair fair theory?
Yeah, not even a fair theory. That's a very good theory.
Yeah.
That's what you need theory.
Yeah.
Because so there's 2 groups playing in here. There's those who are predicting or looking at CPI, looking at the data, and then there's another group that is more what I guess they are hedge funds and pension funds and more longer term. They go by the fact. So they would exit their trade when the fact that Fed has said we are not going to do, or we see the dot plot is not as aggressive as it previously was. And then they're going to be a move. There's definitely going to be a move there. And obviously, I would love the euro to be even higher before selling, to be honest. I would love like 110, 111. We are currently like 109. So it's not a perfect spot, but going forward, also less rate cuts priced in the dot plot that is expected, or like blatantly just say we're not ready to cut anytime soon, which is, when I think about it, a very fair statement. He doesn't have the data to back what he wants to do, and so you can kind of hope and pray. And I think he learned something from last time, that he slipped and he saw the reaction. He doesn't want that to happen. So I don't think I think he's going to be more cautious this time around.
Yep. No, I think you've set the scene really well for us, Ivan. And I think that with this week, the other thing to think about is that you made mention to, we've had some hot inflation. We've had higher than expected PPI wholesale numbers. We've seen higher than expected CPI. But at the end of the day, we see those numbers, but it only matters what Jerome Powell and his entourage, his team, says that they're going to do about those numbers, right? Because if they come out, and this is where I have to remain open-minded, because I am still thinking that I think that the indices could pull back. I'm thinking that Jerome Powell is going to look at these inflation numbers and say, yeah, they look a little bit hot, and we're not very happy with where that is at. And that could change the market scenario. But if he says something to the contrary, at the end of the day, his word matters more than my theories of what his words are going to be. So we'll see what happens. We'll see if we get anything changing. But going into this week, I would generally think that dollar could see a little bit of upside, and indices could see a little bit of downside. But we'll see if that plays out, or if I'm totally off on that. But we'll just have to see. Any other currency pairs, Ivan, that would really be interesting to you? Dollar yen, or yen crosses with the Bank of Japan? What do you think?
As a dollar yen, we can have another hour talking about yen, and we really need to. But point being, there's a lot of explosiveness in that, because it's not priced in if negative rates happens, and I guess we're like, okay, we don't think they're going to do it, but if they do it, it's going to be a lot of fun. So I talked about that in the in the Discord an hour ago or two. That just a preview. It's not really about today, but it's the next few months of strengthening in yen. So we just need a go ahead clearance. If it's going to be March or April, kind of doesn't matter to me so much. But if we get, or as they have said, they're going to change. They will change. They are thinking about it. Then we're going to have months of yen strength. So
Yeah,
That's
yeah, and again, the second you think the yen can't get strong is the moment that it totally knocks you out. And that's the thing is if we see something from, if we see rate cut expectations increase in the U.S. at the same time that perhaps the Bank of Japan is serious about starting to be more aggressive with getting their interest rates higher. One thing, Ivan, you can see it. In the Nikkei. The Nikkei is on fire. It's flying. And that is in reference to there's some growth in Japan. And that growth, if it trickles into monetary policy, that yen is going to strengthen. It's going to come back to the table a little bit where it's been knocked out laying on the floor for the last few years. It's going to get back up and it's going to join the party again. So we'll see if when that moment happens. I totally agree with you. Be very careful that you're not caught on the unwinding of that carry trade that could potentially take place, whether it be this year or sometime this year or next year. We'll see, but should be really interesting. Ivan, you mentioned it a second ago. Let me also just remind everybody in the audience. Ivan does coaching webinars within our Discord channel. He does that a couple times per week. He adds a tremendous amount of value to members. If you're not already in the Discord, make sure you're tuning into those. In fact, I'll show you really quick where you can do that. If you are already a member, just go down to education, these VIP webinars with the little TV emoji. Ivan is king over there. He's got tons of value to share with you. He also offers one-on-one coaching, one-on-one mentorship. So if that's something you're interested in, make sure to hit him up there, as well as make sure to subscribe to his YouTube channel right here. He's got his own channel where he puts out great value. Ivan, thank you very much for coming on the show today, and good luck with this week. Try and stay alive. I'll do the same.
Thank you very much.
All right. See you, Ivan. Have a good one. All right, guys, and real quick, we are going to thank a sponsor here on the show, and then we'll be right back. We'll set up here with Chris, who's going to be helping me out with the show. I'm really excited to see what Chris has to say for this huge pivotal week coming in right after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, and we are back for our segment with Chris. Hey, Chris, how's it going, man?
It's going great, Nick. How are you? Happy Monday.
Good. Happy Monday to you. It's always the old expression is most people hate Mondays, but traders don't always hate them unless you're on the wrong side of the market. I was wishing that this S&P would drop a little bit further. Chris, what are you watching for? This week is huge, man. We got the dot plot from the Fed. We've got the press conference, see what Jerome Powell's thinking about with all this hot inflation numbers, but the economy's slowing. What is your game plan for this week? I'm really curious to hear what you've got for us.
Yeah, I positioned essentially everything is directionally neutral for me this week,
Okay.
and I'm just planning around volatility. So the trades that I have, I'll show just a little strategy. I was chatting with Frank offline a little bit. So I positioned for basically this is the SPX. I did the same thing on the XSP, and all it means is when I first put this trade together on Friday, we were trading around 51.20 and change when I did this like end of day Friday. So this is where we were. This is where we're currently sitting. I'm watching this live, and right now I've got about $100 of profit on the trade. That's fine. That's not good enough though. I mean, I paid like $13 for the debit. A dollar is not that interesting to me. I know there's a ton of volatility that's likely going to sink in this week. I don't think we're going to stay in the dead zone. This is my weak spot in the trade.
Got it.
So what I'm looking at is if I was surprised to see today's gap as well. Nick, did you also see that there's a giant AI conference kicking off this week?
Yeah, I saw that, and I saw the NASDAQ up, and then when I dug into why
Yes.
is the NASDAQ up, seems like that has some correlation there.
Yeah.
So
So
yeah,
again, I just look at that as like it's noise, and maybe that's where the market's all excited today. But are we taking out highs? Not yet. Are we taking out recent lows? Not yet. So I think we're just gonna have to let the week unfold. I mean, this position, for example, if there's follow through to today's movement and we push up here towards like 50, let's say that the SPX is trading, 5175 or 5200. I'm gonna start, hitting this first peak of profit. I'll take the whole trade off today if I have to. So,
so if you get
my
a
max.
run up on the S&P, you just
Correct.
cash out, take the profit
I'll
before
just take
the
the profit. I'm
run.
not, and I won't even reposition for it. I'll just take the profit, call it a day. I still have positions running on the XSP. I have positions running on the SPY as well. So let me return this back here. So trades that I'm in. So SPY, pretty neutral. I mean, if we poke the highs this week, if we poke the lows, I'm going to make some profit there. I was kind of hoping that we'd have a big enough week where let's just go to the weekly time frame. The SPY's been averaging about $10.77 on a weekly time frame.
Mm-hmm.
So I'm hoping that we can at least get a $10 move this week. So, with last week's close around 509 or 510, to the downside of that, that puts us up towards 499. To the upside of that puts us up towards 519. Here's one thing we have to consider. If we closed at 509 and we push up 10 points, that pushes up to the same highs that we have yet to break. If we push down to the lows, that's certainly where the market's a little bit more vulnerable. Where if we get into 500 or lower, now we're talking, trying to fill that NVIDIA price earnings gaps that we had in the SPY. It's like 503 to 497 on the SPY on the daily time frame. And obviously, if we're on the right hand side of the trend line, that gives the bears a little bit more confirmation to possibly run this correction a little bit deeper. I
Yep.
still think a 3 to 5% correction is healthy and needed. I could be wrong. Maybe the worst case is we're going to dip 1% and then the market buys the dip immediately. But I
Yep.
still think the correction technically is needed. I like to see 3 to 5%. And the reason why is I don't think Powell's message is going to change that much. I think, if we have our FOMC session on Wednesday with the press conference and everything I mean, Wednesday is going to be a busy day for you as well. I mean, you've got the FOMC session, plus you're jumping into the trading battle at 3 p.m.
Yes.
So it's going
Chris,
to
are
be a
you in
crazy.
that? Are you a part of that trading battle?
Yeah, I'm
I
hosting
threw
for you
your
guys.
name. You hosting? Okay,
Yeah.
awesome,
Yep.
man. That is going to be a fun stream. We've got Fed meeting, and then following that, guys, we're doing a trading battle. Which, if you've never been a part of a trading battle, they're really fun. And Chris, I think I told that team over that's taken over for a trading battle. I told them I think we're gonna smash some records for them because we are literally going to bleed this stream together. You, me, Frank, the whole gang. Bleed it into Boris and you and me going into the trading battle. It's going to be a really exciting week. But let me also say this, Chris. So for people in the audience who are kind of like wondering, a lot of you guys have not traded options before or heard it before. What I think is fascinating here is, in layman's terms, Chris is basically setting up for a big swing either direction this week. He could make some money. And that's really cool because if this market just snaps back, breaks through the highs, you just mentioned, you're going to go ahead and take profits on your position. And if we get a huge downswing this week, let's say the dot plot comes out unexpected. So you're basically just positioning for, you think there's going to be some high volatility. And with the VIX so low, relatively inexpensive to do some of those trades, I would imagine, right? Just because the VIX is low, doesn't that decrease the cost of buying some of those options?
That is correct. When the VIX is low, it is better to be an option buyer. And that's the thing is we might see that the VIX spikes and
Yep.
you can play it both ways where this week it might benefit me to be a buyer because that volatility plus we're at low prices. I get a decent bid and ask on some of my option plays. But let's say Jerome Powell, rattles the cage a little bit and the VIX, spikes up here towards 18. I mean, 18 to 20 plus is, it's expansion in IV, but typically what we see is that expansion in IV quickly contracts. And I think that the markets are so bullish right now. And I think even in another thing, let's talk long term for a second. Let's talk out to this year. I consumed a ton of content this weekend and last week, and I talked about this a little bit in my trading rooms last week. I think, and I'm listening to a lot of smart people that are like, okay, this market's a little bit over its skis and long in the tooth, and they use those phrases a lot for like, I think a correction is needed. Now, it'd be one thing if I was a doom and gloomer and I'm just trying to say like the market needs to correct and this is going to be the worst crash ever. But I'm not saying that.
Right.
I'm positioning a lot of my trades on I just need price to go up a little bit or down a little bit. I'll make some money. Price goes nowhere, I can make some money. That's fine. But with a week like this, a lot of volatility. We have quarterly expirations next Thursday on the 28th. But what's interesting is I don't know what the Fed wants to do, and nobody really does. I mean, the market expects 2 to 3 rate cuts this year, and it's still priced in by the end of the year. The CME Watch tool has the Fed sitting around 4.5% by December of this year. That's still going to be a 75 to 100 basis points move. Now, I think the Fed can be reactive on something that's not necessarily its own doing. So this, I started talking to Ivan earlier about the Japanese yen. I think that the Japanese yen could be the bigger factor going into the end of this year or into next year, because we typically have seen these carry trades unwind after about a 2-year period. And if you think about March 2022, when the Fed started raising it and the JPY piggybacked on that with doing nothing, by the way, they just kept interest rates the same at negative 0.1. But that carry trade started and initiated in March of 2022 as far as the direction. But then brokers and liquidity providers finally offered it to us as traders in early 2023. So if we unwind it now, I think that the Japanese yen is way too early to be looking for tons of JPY strength, at least sustainable strength. So I could be wrong, but my thoughts are, Japan economy, US economy, kind of on similar wavelengths as far as debt-fueled rallies, and the Nikkei's finally had a 1% gain in the last 34 years. Congratulations for coming back from the massive drawdown. But at least it's showing promising signs, and I don't think that the Bank of Japan wants to disrupt that either. If all of a sudden they strengthen the yen and the Nikkei gains all of a sudden are eroded very quickly, I think that ruins a lot of investor optimism. That ruins a lot of positioning that they've seen for the last 9 or 10 years, where you have gains that are wiped away very quickly. So anyway, all I'm saying is I think that the Fed, if they're going to be reactive this year, I think that potential black swan could be the unraveling or something with the BOJ that the market's not necessarily pricing in yet.
Yeah, I've heard that language spoken about a couple different times by other people as well, that, keep an eye on Japan, if that's kind of a, but as you mentioned, there's always the doom and gloom case to be made at any given point. You can literally, at any point, you can say like, oh, the market's going to correct 60%, and come up with reasons as to why. But I'm kind of with you. I mean, for me, it's, I've invested countless hours into building the systems that I've got. I know you've done the same, right? We're not, for me, I've tried to take a level of discretion out of my trading and just kind of ride what's in front of me. I mean, Chris, the Dow here for me is giving a bullish signal. So, for me, what that means is I'll still be constructive. I still have my biases where I think, the indices, I'd like to see them pull back. But I have to acknowledge what my systems are telling me to do. I mean, I've built them, and same thing for you. When you have those signals from your systematic approach, which I know you have, I know you use various market data as well. Having that rather than just firing from the hip, you do kind of just have to take what's in front of you. If something changes, the beautiful thing about being a trader is you can adapt. If you're just a long-term investor, you just say, I buy this and wherever the wind takes me, because if the market is unrelenting for the next 3 years, you're just a long-term investor. You just say, well, my company survives this storm kind of thing. Whereas as a trader, you can say, well, I'm gonna position for this. I'm gonna trade this. And, hopefully your systems, if you've spent adequate time, will help you to spot those opportunities in the same direction. Chris, I wanted to show you this just because I was proud of it. I talked about it earlier on the EDGEFINDER's top setups. So we had these columns, and I still have to do it for labor market. This is our next to do. The labor market, has a couple factors in it. There's like unemployment data in there. There's employment change in there. We had one for economy, and I went ahead and just parsed it out. So if you're ever using the EDGEFINDER, or for anybody who's listening who is also an EDGEFINDER user, just wanted to show you this. The EDGEFINDER now, you can, instead of just getting a broad speaking economy read, you can actually now just see the specific scoring mechanisms there, the latest GDP numbers, how they impact the related currency pair, commodity index, et cetera. I just want to point that out. Manufacturing PMI, services PMI, retail sales, and how those are actually contributing to the score. We're trying to make our system here less black boxy, right? Less hard to understand, easier to understand. But I just wanted to point that out to you, as I know you're an EDGEFINDER user yourself, in case you ever wondered about this page. Chris, before I'm going to step off, give you the floor here for a little bit. Before I do that, I just want to mention to everybody who's listening, Chris has his own YouTube channel, his own content. He has his own Discord, his own services. I highly recommend, as a thank you to him for taking over these shows, helping us out to continue to offer free value to you guys. Make sure, go find Chris's YouTube channel, go check out his Discord, all that good stuff, and get some more free value from Chris. Chris, thank you very much for taking over the show, man, and enjoy it.
All right. Thanks, Nick.
All right. We'll see you next time.
All right. I'll see you Wednesday.
Yep.
All right. All right, everybody. I see some comments coming in on some currency pairs. Let's have a look at everything today. So just a quick review on the major indexes, the Dow. So here's what we're certainly seeing more of right now in the US markets. We have 1, 2, 3, 4. I would say the last 4 weeks of trading have been the struggle bus for most of the US indexes. We have not made new highs. We have not made, threatening lows. Like we've poked, but we've been bought. We've poked, we've been bought. So we've got a nice range here. That's what's going to be interesting about this week's price is we expect high volatility. This is what I'm positioning for. Are the markets capable of breaking some of these lows? And, in the event like a big catalyst week where we have 4 central banks, this includes the Bank of Japan, the Reserve Bank of Australia, the US Fed, as well as the Swiss National Bank. That's a lot of central bank noise. That's certainly going to have some impact on currency prices this week. If you think about the rates and what's expected this week, here is the BOJ. Policy expected to stay the same at negative 0.1%. So no change. Okay. RBA, 4.35%. No change. Fed on Wednesday, 5.5. No change. Swiss National Bank, 1.75. You guessed it. No change. So there's no decision this week that changes these central banks' rate decisions. Now there's guidance, there's press conferences, there's reports, there's numbers, there's data, there's stuff that will be surrounding these events. But the reality is when it hits the news, officially, there's likely going to be no surprises this week. Now, that doesn't mean we can't have volatility. In fact, that's what I'm anticipating is high volatility. And so looking at the indexes here, highs and lows I'm watching very closely. Here's the QQQ. Highs and lows I'm watching, right? The SPY, highs and lows I'm watching. The fact that we gapped higher today, interesting. I really was thinking, okay, we had a pretty rough day on Friday last week. We sold off to finish the red, the high wick in a little tiny red sliver of a candle last week in red. But the gap higher today, I think, just kind of resets and repositions everything. Where today we sit right here, and give me $9 or $10 for the week. Do we go up $9 or $10 here on the SPY? $9 or $10 here on the SPY? That's essentially what I'm trading for. So I will be watching my positions carefully. The list of trades that I have, and I'll go into some requests here in just a moment. But the list of trades that I have. So I'm on SPX this week, SPY, QQQ, DIA, IWM, and XSP. These are all positions that I have that are index related. Okay. All I need is a little bit up or a little bit of down, and I'll carve out some profits. I'm probably looking at like 10%, 25% profit targets this week to be very conservative. If I want to, wait a little bit longer for like Wednesday's Fed to roll in before we get closing bell, see how the market gets shaken up a little bit with Jerome Powell on Wednesday. Or maybe it's pre-Fed. We've seen some movements where it's pre-FOMC and the markets already decide to kind of go one direction, and then it gets neutralized by the Fed. So if I am in position running up to the Fed on Wednesday afternoon, I'll probably start taking some profit if I hit those profit targets. Like I said, 10%, 25%, pretty common that allows me to kind of trade with a high probability. So anyway, those are positions that I'm in right now. Time frames, yen pairs. We'll take a look at some yen crosses. Do I trade shorter time frames? When it comes to forex trading, I'm typically like a 1 hour, 4 hour type trader based on daily and weekly structure. When it comes to options trading, I like to position for the week and I'll manage that trade kind of start to finish. I mean, obviously, I'd like to get out of the trade as quickly as I can. If I float this out again, I mean, this is showing that I'm in profit right now, which I am. But it's not a huge profit. I paid about $13.30. Right now, the trade's trading for about a mid of like 14.50, 14.60. So I'm up about $1, let's say $1.30. Okay, I'm up about $1.30 on a 13.40 debit. So if I do the math on that, you're going to see it's right around that 10% profit target. So I'm up $1.30. I paid $13.40. I'm up about 9.7% on that investment right now. But I'm not going to close it because if we had this gap today, if the price wants to push a little bit farther, that will just ramp up my profits a little bit more. I would be happy. I mean, realistically, if I get a $2 move in profit, like last week, I did the exact same type of trade, directionally neutral, delta neutral, an options trade, and I ended up taking about $2.60. And that worked out to be about a 19 to 20% profit. So if I take $2 out of a 13.40 debit, that's that 14, 15% level that's right in between, right? 10%, 25%. If I want to be conservative and take it off later today, I mean, I think I would just take it and be good with it. But I'm watching these levels carefully. Okay. Let's talk about some currencies. Ron, I think you can answer that question, right? If you're running 25 currency pairs, this one instance of MT4, you're running one instance, right? And usually the bigger the core, right? The larger the VPS, the more cores. That's to run multiple instances. But I'd still want to have a decent sized VPS to handle, one instance running 25 currency pairs if you're trying to, clone what I'm doing in Hypertrend. So I think at least like a four core would be good. At least if you're only running one instance, if you're running 2, 3, 4 robots and running 3, 4 instances of MT4, then I would have like the 8 core. Just my thoughts. Okay, let's go yen crosses for a second, and I'll talk directions of my currencies. So dollar yen this week, we're looking at a recent high, recent low here. We're sitting right in the middle as we have a super volatile week ahead. It's look, I'm honestly not that interested. I took a buy trade on the dollar yen, stopped myself out with a small loss. I think that the true selling in the yen cross for me is when it's super obvious. If I'm trying to get in here and try to pick my tops right now, I think it's just too noisy. So be careful on the yen crosses. The one thing that is like amazing, it's amazingly tricky about the yen pairs because when you trade them and you get proven right, you look at your chart and you're like, it's so obvious what the yen is doing. But when you're in the trenches and on smaller time frames, it is so noisy that it just can be a nightmare. Like highs and lows are being tested. It seems like it's low volatility. You want to range trade the yen, and all of a sudden we have these massive 1,000 pip breakouts that won't stop for months and months and months. So my point is this: if all I'm doing is watching the yen right now in the weekly time frame, this is where the big sell-off is. We've got to be on the right-hand side of that trend line, right? So realistically, even if the dollar yen were to dip back down here, I think that still offers a chance to buy the yen or buy against the yen one more time until we come up and retest these highs, possibly, run some stops at these highs and make the pain trade a little bit more painful as this carry trade is not going to unwind yet. That's my thought, right? Now, if we break this level, and we break this trend line, I mean, if we prove that we're down here breaking this low, I will look, stop losses reasonably above these highs. I mean, position for it, take small trade sizes. I'm doing this in my own trading rooms right now where, look, I'm willing to take trades on the Japanese yen. We're in the Swiss yen short. We've taken some stabs at the dollar yen. If it's a good trade, I'll still take it. But what I refuse to do is get heavily positioned and heavily biased on the yen crosses. So my trade sizes are really small. I'm literally trading micro lots on the yens because I'm like, look, if I'm going to take this, massive 2, 3, 4, 500 pip stop loss, I'm going to trade a micro lot. I'm going to lose $50. If I'll trade a micro lot, I'll lose $100. That's it. Like I'm going to keep my trade size so small that the risk is almost insignificant. And if I'm right, then yeah, we can go for big reward to risk trades. I mean, this is a good example. If we're right, this trade is, 2,000 pips There's plenty of pip potential out there with better confirmation. But what I'm not interested in doing is trying to survive, day to day, week to week on yen crosses when this is going to happen, or just lots of noise. So, like I said, be careful on the yen crosses. If I go to some of the yen pairs, Aussie yen, for example, has Aussie yen broke the structure yet? No, it has not. So why would I force sell trades on this without having trend line confirmation? If we break the trend line and we go down, plenty of downside potential, right? 96 down to 86. That's 1,000 pips. If we have confirmation, I'll trade it, but we don't. And part of me thinks that we just tested the trend line. We're going to go back up and poke the highs. So I think that if you're still looking at this from the longer term carry position and that unwinding is not going to happen yet, I would rather be trading against the yen versus favoring yen strength. Just my opinion. Okay, CAD yen, same thing. CAD yen is certainly a little bit more vulnerable. Oil's been up, so it's surprising that the CAD yen has dropped the way that it has. I'll say this: if we get into this zone, I think that the CAD yen has some good downside potential. Couple of levels to go after. A stop loss would be important to have. That's it, right? Like it's not that complicated. It's just where's the clean trade at? So just think about that. Where's the clean trade at? The yen pairs, when the dust settles, you look back in hindsight, you're like, why did I trade against what I see on my chart? Just trying to make it simple, So I'm not trying to complicate the yen crosses. I'm trying to trade them small. If we're right, let's get paid. If we're wrong, we lose a very little bit. It's going to be something we just move on, And truthfully, I think there's other good trades out there that don't revolve around the yen. And I think think about how like highly anticipated these yen stuff is. Everybody's looking for the big move on the yen. It just doesn't happen that quickly. I think that if I'm putting some time, if I was going to put timing on this, I would say that we're probably going to have something happen around like November, December of this year because it's going to be pivotal on the election. We're going to go into a new year in 2025 when there's way more stuff that can unfold. The U.S. gets through an election and starts a new administration or starts current administration for a second term. But the reality that we've seen, from just 2020 to now has just been crazy. Like the markets, if you've been trading the markets in any capacity the last, 3 to 4 to 5 years, like 2019 to present, you have experienced some stuff where I would say that type of, I've been trading for over 20 years. And so for me to look at like, how many environments could a trader experience? Well, if you've experienced the last 5 years, up, down, sideways, volatility, highs and lows, all sorts of wild stuff, intervention, manipulation, booms and busts, all this has happened the last 5 years. So it's interesting. Like 5 years has been such this concentrated case study and experience of, man, what was it like to trade through the great financial crisis? Well, I did it. I mean, I was young as a trader. It's like I was, 7, 8 years into passive investing and just cut my teeth in forex for the first time, and I traded through the great financial crisis. Right, .com when I first started trading. Okay, fine. It's like none of that really resonated with me. Like I mean, 20 years of market experience now, I would trade it differently. Right, I survived it. I kept trading. I kept investing, and I think that's probably the biggest takeaway through all this is no matter what happens, the financial markets are going to offer up winners and losers, and like Nick said earlier, we as traders need to stay dynamic. I'm not trying to put on this like big bias and this big stubborn thesis where I have to be right. Traders have their ego checked all the time in these markets because you could be dead wrong. And I'm happy being dead wrong as long as I'm out of the trade and not letting it hurt me any further than it already did, right? Take a calculated risk, take a defined risk. If you're right, awesome, I expect a win. If I'm wrong, get out, be done with the trade. Don't let it, question your strategy. Don't let it question your motive and ability. It's like just move on to the next trade. Be Ted Lasso says it, right? Be a goldfish. I think he says that. So anyway, that's it. All right. So CAD yen, if we break below, 10, let's say 108.50 or so, I'm thinking there's a little bit more vulnerability to the downside. But again, if it doesn't do that and we go up and we poke these highs again, don't be surprised to see a weaker yen. Okay, Swiss yen. I am currently short in the Swiss yen at 169. This to me is one of my better technical setups on the yen crosses. Now, again, I could still be wrong on the trade. I have a stop loss above this high. Okay, I'm at 169. I didn't put my stop loss to break even yet, but I'm also I have an entire strategy on the Swiss franc. Right now, I'm against the Swiss with positive swap. The Swiss yen is not positive swap, which is why this trade kind of sucks. But the reality is, if it's good with volatility and the Swiss gets weaker as we head into this pre-summer push from now until end of May, the Swiss yen could be a nice little unraveling here. The Swiss in general could be a nice little unraveling, and we possibly set up a really nice head and shoulders pattern or something that's bearish. So let's say we creep out this top here and carve it out, and we push down and we break this structure. This could be an excellent head and shoulders trade, a massive topping formation on a weekly or monthly time frame. And from there, look, it might take months to play this pattern out, but I think with the pattern in and the higher time frame, it could be a really nice self-fulfilling prophecy. So I do like Swiss yen as one of my favorite yen pairs. The crappy part is that it would be a negative swap trade. So if you took the Swiss yen, the good thing is it's going to be high volatility and lots of pit potential, but getting charged every day to hold a position is a little bit costly when it comes to holding position for maybe a month or two or 3 or whatever it takes. But this is one of my better setups as far as if I'm right and we hold out this top and we work our way back down towards 162. I'm looking at about a 700 pip move with my trade, and then I'll start taking some profit. Look to fade that type of move and continue this topping pattern to trade it down to measured moves. Really simple. If we have a high to low, I'm going to measure a lower high to lower low and a lower high to lower low. I'm going to go after 3 to 5 waves of this type of trade and try to measure those impulse moves in my favor. And take a chunk of profit here, take a chunk of profit here, take a chunk of profit here, and then I'm done. And that's it. Okay, so that's the Swiss yen. The euro yen, same type of thing. We flirted with the trend line break. You see it didn't happen yet. The pound yen, I don't really love the pound yen at the moment outside of this. Watching kind of this structure really carefully. It's an interesting price action right now. I just don't love it. I think we have some kind of odd broadening pattern, but I don't know. Not my favorite. New Zealand yen, kind of like the Aussie yen, we're not breaking structure yet. You can see there's a buying opportunity right now. Again, tight stop loss, right? If you're buying this and going north, that stop loss is very tight. If we breach that level, sure, we can open up the floodgates to the downside, but that'd have to be a quick unraveling. I just don't think it's going to happen quite yet. Dollar yen, we already did. I'm seeing a lot of, please, gold. All right, we'll talk gold. Look, I'm bullish on gold. Right? We've had a light participation, but a crazy bullish run that I think the posture is legit. I think the close for the first time in a long time since the highs here in August 2020. I think gold is trying to tell us something. I'm not exactly sure what it is, but I'm following price. And so all I looked at was this. We took this low, we took this high. If we have any pullbacks, this is my halfway point for a measured move. And this is, so I'll put a half right here. And this is my full move. So all I did was measure this range and projected that move all the way up. I took half that range and projected it right there. So all I'm doing is looking for a chance to buy a dip or get a, bullish move and a flag. And then we're looking for some follow through on gold. So I'm hoping that gold continues to head higher. Invalidation levels for me, as long as we don't dip below 2070, I'm still going to remain pretty bullish on gold. Obviously, total invalidation would be around 2000. But I'm positioned for GLD. I'm positioned on gold with options. I don't own the shares. I'm just trading the derivatives. Okay, but I'm looking for price levels. 2270 to 2300. Full measure move around 2470 to 2500. Okay, silver has been outperforming gold the last couple of weeks, and silver, same type of thing. It's not quite there with this wide open obvious breakout, but this run from 22 to current price, I would love to see silver do this. If silver breaks above 26, I'm looking for this move to get back to 30, and my first real wave 3 symmetry is up to 35. So this low, this high, all this has been corrective, right? If we break above this, if we're starting to put in, a trend this way or even a channel this way, I'm looking for that bulls to maintain their posture and get back to 35. Now, this could run a lot faster than that too, right? We break above here, we run to 30 plus, maybe we pause or hesitate just briefly at the highs. But if we have that big blow off move like we had in gold and silver all of a sudden catches up, I think 35 is in the cards. So I do like silver and gold long this year. I said that late last year in Q4. I said that going into this year. These are two of my favorite technical trades right now, and they're starting to work out really nicely. And I'm just trying to keep and maintain the positions for it. Okay, so I like silver and gold. Bitcoin is having a bit of a pullback, yes. So we're at 66.9 right now. We had pokes around like 73 and change, almost 74,000. Again, try not to complicate it. I said this morning in my first session. If we get back to 60,000, pretty interesting, looking for some buys. Ideally, I'd say right around this 55 to 56 handle. If I get a chance to buy, 55, 56K, come back to some of these inefficiency levels, I'm going to look for, and it could be this. I mean, we could have just a little correction here, some profit taking, wait for a trend line to break, and then look for a chance to buy. But I would just dollar cost average in. I like this 60 and 50 pullback level. I think that my goal this year would be I'm going to stay pretty aggressive in positioning for Bitcoin to the north. And my profit target would be 100K to 125K as far as price. We get up to that spot price, I'm probably taking a heavy amount of profit on some of my Bitcoin positions. I've been in Bitcoin since 3,700 and 4,500 back in 2019, 2020. And then started adding in a lot this year once we had 17.5 and 20 was tested, 25 the break at 30. So I've been watching price. And again, I treat Bitcoin like a trader. I'm not a hodler. I'm not a diamond hander. I'm just a trader. So when I'm up, 500% or 600% or 700%, I'm a trader. That's a pretty good gain. I wouldn't mind taking some profit, reestablishing new positions, checking out the difference between spot price and mining costs and see where things are at. So anyway, it's gotten exciting, obviously. But what I don't love seeing is that, Shiba Inu and Dogecoins and some of these crappy, meme coins are going crazy. It's like, that's not what I'm really interested in. So I think in that nature, there could be a bit of a pullback and a cleansing, which technically makes sense too, which I'd like to see that. Okay. All right. Euro dollar, we'll look no further than the dollar index, which I think is pseudo confusing, to be honest. I mean, the dollar index, I literally am torn between two patterns. To the upside, I see this. We had that holiday pivot right around 101. I see this as a potential bullish crown. If we get the dollar to break, and this is the hard part, is I mean, we hit the backside of this trend line. We've had 3 or 4 decent pushes to the upside on the dollar. I could see the dollar gaining some strength this week, right? Could. Now, again, I say I'm stuck between two patterns. If I'm correct with this being the right tip and the dollar gets a rally, dollar strength would likely translate into a true correction in the stock market. Now, a true correction could be 3, 4, 5%. It could be, deeper than that. We could have 5 to 7%. I don't think the stock market's going to dip much more than 10%. I really don't. I think that we have, a 3 to 5% correction. The market still aggressively is eager to buy. It's an election year. The Fed is fairly accommodative, even though they're playing this harsh game with language. They're pretty accommodative. I truly think that if the market were to break down very quickly, the Fed would do something reactive, as they typically always do. So, they say the Fed put. That's what always been the backstop. I mean, we saw the last time we saw the Fed put was with Signature Bank, Silicon Valley, when they were basically declared insolvent. We had big banks step up. We had the Fed step up, increase the balance sheet very quickly, and then unravel it all over again. So, long story short, dollar index. That's what I'm saying on the euro dollar. If the dollar index is going up, okay, dollar index up, then euro dollar's down. Here's an easy way to trade it, in my opinion. Euro dollar, it's the trend line that I'm looking at right there on the daily. So if the euro dollar starts to break this trend line, I'm looking for euro dollar to head lower. This could also be a crown pattern, left tip, center tip, right tip. Okay, if I get that dollar strength that I'm looking for, euro dollar heads lower, that's a clean break. It's not there, it's not confirmed yet, but it's pretty darn close. We get into this territory looking for that push, stop loss above, high to low, lower high to lower low, if we can get there. Okay, now that's if we break the trend line, because it's sitting right on this trend line that if we all of a sudden, poke here and then close higher and we fake that out, okay, then it's obviously not the follow through that I'm looking for. So the dollar index has been tricky because, like I said, two patterns that I just drew. One, here's the other one. So this was pattern one, looking for that trade to head higher. Here's pattern two. We already looked at gold. We looked at gold and at silver. So that's the other trade. If dollar is weaker and we can't break above this yellow box again, so this is resistance, resistance. If we have left tip, center tip, right tip, and the dollar gets pushed lower, I don't see the dollar necessarily going back below 101 or 100. But to start a pre-summer push and get the dollar weakness to take over, that'd be the kind of DXY direction that I'd be looking for. And again, if the dollar gets weaker, markets rip, risk appetite comes in, and I do think the dollar would offer a pretty good basket trade. You can see Aussie dollar, New Zealand dollar, Euro dollar, pound dollar, all do pretty darn well in that environment. The ones that I'd say I wouldn't necessarily jump in on dollar weakness would be dollar yen and dollar Swiss. I would think that I'm just going to stay. I'm going to stay out of dollar yen for the most part, unless the trade is really good, and I'm going to stay in long on the dollar Swiss because it's positive swap. Okay. So let me do a quick spot check really quickly on my position. So we're trading at 51.72, 65. I'm just watching the mid price here. So like I said, I'm up about $1, $20, $30 on my position. I want to see if this pushes just a little bit higher. I mean, we're at 51.72. We're at a fresh high of the day. 5,200 is probably where I'm looking at maybe grabbing some profit. My first peak here is around 51.85. That's only another, 10 to 15 points higher. So I'm curious how this Monday plays out. But anyway, that's on me. So that's it. I mean, looking at the A1 setups this week, we've got some good trades. Euro Aussie, I like that direction. I've been bullish on that one. Euro New Zealand, I'm bullish on that one. Euro Pound, I want to check Euro Pound. Euro Pound, I think, is a really good looking trade if we start to get a break. So EDGEFINDER might be calling a little bit early. But if you can see this box right here, this is a pair that's super boring as far as pips and volatility. But if we get a break above this, I like that Euro Pound. EDGEFINDER already has it bullish on a score of 6. And technically speaking, if we break above, let me see that price point here. We break above 85.75, let's say 80,600. I mean, that almost looks like, man, as you're losing pips, but it's only about a 25 to 30 pip difference. Anyway, if we break above this, I like that trade going back up. So if we hold these levels, get a nice clean breakout on Euro Pounds, I would look for that range to come back in. So from it's not a lot of pips. Like this literally is like 100 to 150 pip breakout, but I think the setup is pretty clean. Pound New Zealand, that went back to neutral, but I'm still actually I should probably take profit on that one. Pound New Zealand, I was up on 150 pips last week. We're probably, I don't know, we're going to pull back. We're in at 204.60. We took some profit. We got back in for a little break in this consolidation at 207. We should be up some pips on this. So anybody that's in my flex trading room, I might throw this in Telegram. I'll probably take some profit. We were long on the pound Aussie, long on the pound New Zealand, long on the Euro New Zealand. Collectively, that's up like 300-400 pips as a total. I might just take the profit and call it good. Dollar Swiss, and then somebody's asking, yeah, brah. Okay, chill, dude. Gold, we already talked about it, man. So come in on time and watch this stuff. 236382. I'm looking for gold to give me some pullbacks and looking to stay long. I think gold is great. We get a pullback here, looking to stay long for a measure move to 2271. If we have a bull flag, it's this low, it's this high, little consolidation, looking for the bulls to take it higher. I'm long. It's pretty simple. Dollar Swiss, I'm long. I'm long. Dollar Swiss, Aussie Swiss, CAD Swiss, Pound Swiss, Euro Swiss, I'm long. I literally dedicated an entire portfolio, an entire account to just trading against the Swiss franc for right now. So that's a class that I launched in September. It's still valid today. I've added a bunch of trades in. I did a 25-minute video just a week or so ago. And I'm going to build up probably 50 positions in this account between various currency pairs. It's 6 currency pairs I'm focused on. I'll probably build them up and add to my positions, get somewhere around 50 positions going long against the Swiss. And my goal is to try to double that account. So I like dollar Swiss long. It's one of the best swaps you can have in the market outside of dollar yen. But to me, this is a much better technical setup. I like dollar Swiss better. So that's it. I'm staying long. Where to? Well, I would love to measure a move like this. Let's say that the dollar Swiss does indeed, test this 92 level. Well, this is a larger reversal pattern. Okay. Any pullback and looking to reposition, measure that move. If it's a head and shoulders, measure symmetry, measure the neckline. There's a big fat pocket here, and there's these crazy 20-year highs that don't seem to break above parity or 102. So parity to 102 is my profit target. If I'm in a bunch of positions, I'll probably close it conservatively around 98 or so. But that's what I'm positioning for. Okay. All right. I'll do a couple more. NZD, what? Give me a cross. Dollar NZD. Watch the dollar index, right? NZD with the dollar sideways. We got to wait for the dollar index to be more clear. NZD as a whole has been weaker, right? Aussie dollars. I mean, if you're asking for a dollar cross, you got to look at the US dollar index and the DXY. It is a toss up this week. Like I could say this week, this is my direction, and next week I could be totally invalidated. The dollar is going to be hinged upon what the Fed does and when the dust settles. Like the dollar, I'm positioned already for dollar strength. Okay. But I could come back next week and say, yeah, that dollar strength stuff, I closed out all my trades for losses and I'm reversing positions. That's how like potentially flippy it is on the dollar right now. Okay. NZD CAD, I'm long. So how about this? I'm going to give you a quick rundown in like 2 minutes. I'm going to go through every currency pair that I'm in. I'm just going to give you a direction. We don't have to look at the charts because I'll wrap the session up here in just a couple minutes. Okay. Aussie CAD, I'm bullish. Aussie Swiss, I'm bullish. Aussie Yen, no trade. Aussie New Zealand. I thought about this last night. I'm going to spend 1 minute on this one. I initially took a breakout trade here. I think that I'm wrong. So I have a system that's long and making some profit for me in the background. But I think that I'm wrong on the Aussie New Zealand. We're back into this wedge again. It's super choppy. I don't necessarily think I need to validate I don't need to validate a stop reverse because my reversal would be up here. If I'm dead wrong, then like, yeah, I'll buy it when it's obvious at 108, 109. We can run up to 113 and 114 again. But what I think I need to do is probably to stop out of that trade. I got in at 106.25, 106.50. I just need to probably exit and say it doesn't look good anymore. I don't know why I need to sit on this for another 70, 80 pips. So I'll probably just bail on the Aussie New Zealand. If I'm going to reverse it, I want better confirmation. If this does in fact come back, then, you know, this thing can kiss my grits and I'll just get back in. But I don't think I need to wait for this thing to like totally invalidate my position. So for any flex traders I have watching, I'm probably going to bail on the Aussie New Zealand and we'll reestablish, something fresh and new around 109 with obvious confirmation. Or if it does come back, then I'll just revisit. We'll put in a better stop loss. Okay, Aussie dollar. I'm currently short on the Aussie dollar, but that is, like I said, coin flip on the dollar because I'm very curious if I need to pivot on the dollar pairs. I'm looking for dollar strength. If I'm wrong, I will exit all of my dollar strength positions, no problem. But I'm right now I'm short on the Aussie dollar. Okay, CAD Swiss, I'm long and staying long. I'm staying long against everything Swiss. CAD Yen, no trade for right now. The Bears have to break below 108.75. The Bulls are in control right now, at least at this little dip. Swiss Yen, I'm going to stay short. If this goes and hits a fresh low, awesome. Euro Aussie, I'm long on Euro Aussie from these equal lows around 64.50. Euro CAD, I'm not positioning on this one. I'm CAD Swiss short, which means if I'm correct in that direction, if this goes up, that means that this pair should go down. They're inversely related. Now, I could see the EuroCAD doing this. Coming up into this pocket zone, we could hit into this pocket that's a supply zone and then start to turn from there. But I don't really like how this is very indecisive at the moment. Realistically, if I'm going to get my CAD Swiss and EuroCAD to align, I'd like to see this pair actually break and go south. But I'm not trading it right now because I'm just holding my CAD Swiss. So I don't really have a EuroCAD position at the moment. Euro Swiss, you guessed it, I'm long. And I'm long and I'm long and I'm long. This is another one that could offer up a massive profit potential. All the way back up here towards 1.01 would be excellent. I'm trying to get bullish on this one, at least to 1.01, but ideally all the way to 105. Euro pound, I talked about this one earlier. There's a little range trade. So if we break above 85.75 or 8600, get long for 100 pips. Euro yen, it's got to break the trend line to be a bear. Right now it's a buy on dip and tighten up the stop loss. Euro New Zealand, I'm bullish. Euro dollar, I am currently short on euro dollar and I'm just holding for right now, but I will pivot and flip that if I need to. Pound Aussie, I'm long. Pound CAD, no trade yet. Bears have to break this trend line. Bulls have to prove a break above 73.50. Neither have happened. So no trade on pound CAD. Pound Swiss, I'm long. Pound yen, be careful. I'm not in it. Pound New Zealand, I'm long. This one's probably good to take some profit. We've been long, like I said, since 204.60. It's up, 500 pips from our initial entry or 450 pips from our initial entry. And we took a little stab here around 207. Probably going to get out for a couple bucks and protect it. Pound dollar. I did a reverse already. This stupid piece of crap. I'm just waiting. I'm currently long in the pound dollar. I might be wrong again, and this would be another stop out. But Haven't determined it yet. I'm still long. So again, if I'm wrong, it's going to be this. This one sells off and get some new established position, swing above here, and see if we can fade that move to, actually see some dollar strength. It's tough, man. The dollar has been a freaking mess. So I'm trying to get some more clarity. New Zealand CAD, I'm long. We broke the trend line. I'm looking to stay long. Simple, right? Sideways here, looking for more breakouts, more upside. New Zealand Swiss, what's that? Yeah, I'm long. New Zealand Swiss, I'm long. Everything against the Swiss, I'm long, except the Swiss yen, right? Because I'm short in that pair, but I'm trading against the Swiss. New Zealand yen. If we don't break these lows, this is a really easy buying opportunity right now. Trendline support like crazy for the last several months. If it stays that way, I like long. I don't have a trade going on right now. I'm just going to wait. New Zealand dollar, I'm currently short. Dollar CAD, probably my least favorite dollar pair, to be honest. We were long, so we had this initial move. We were long at the early part of the year. We took a swing trade, took some profit. That's it. We're at the halfway point. This thing's a dumpster fire. I don't know what it wants to do with the halfway point. It's super confusing. So why am I trading against the Swiss? Because it's a great technical setup. Case closed. Positive swap and a great technical setup. That's all I need. I don't need much more than that. Look at the technicals. Dollar Swiss, I'm long. Dollar yen, it's the bears have to do a lot more work. The bulls are probably in control in the near term, and this carry trade on things ready to unravel. So there you go. So Burns, I just answered it, right? Technical setups, you got 20 to 30-year lows on a lot of the Swiss pairs. You have a swap environment right now that offers positive carry. You got great technicals, and you get paid to hold positions. So that's all I need. And as a forex trader, anytime you have great technicals, I take the trade. Technical is a forex market. I'm if you try to get into the fundamental weeds, you're just going to confuse yourself. So technical is ultimately like these self-fulfilling prophecies in forex, which is pretty cool. Okay. All right. Anybody coming in late? I've done a ton. We did literally 28 currency pairs. We did stocks. We did indexes. We did Bitcoin. We did gold. We did silver. I'm going to sign off. Okay. You want to check out the recording? Check it out. I'll let you go for today. Looking forward to more this week. Like Nick said, and know this on the calendar, it's going to be a busy week. 4 central bank rate decisions, FOMC on Wednesday. A lot of stuff's going to be hinged on that. We'll see how the market unfolds, and come back and join us then. All right, thanks everybody. Take care.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.